All right, so we have a big day today. Today the market moved up today. Gosh, mine moved up 4% today. I'm not sure what yours did. The stock market as a whole went up today. Um, so we'll talk some macro trends. I'm going to toot my own horn a little bit, and I'm going to give you a warning. So that'll give you a good sense of what we're looking at. So I guess we'll just start with tooting my own horn. So back on what is it, January 18th, I put out a video. This is the list of my videos on the YouTube channel. Basically, how you're going to make your annual salary in the next 6 weeks. It's just beginning. The media is literally telling you how you can make massive profits coming. The most important video I've ever made. Let me get into the Robinhood. But anyway, so one of the things, and then obviously on February 8th, I put out a video how I'm prepping for a massive payday in the next week. So I saw something happening all the way back in January. This was before any of the Reddit stuff came up. I wasn't talking about meme stocks or anything like that. So as we look at that today, let's go back to the last month or two. Let's go 3 months. And back on January 18th, we were right here. I was sitting at $113,000. And since then, I'm sitting at 168. So basically made 55 grand in the period of, I don't know, a month and a half roughly, close to 2 months. About 6 months, 6 weeks from what I was talking about. Realistically, take a look at where we're at here. Say 115,000. So we're sitting here at 168 divided by 115. Basically made a 46% profit in the matter of that amount of time. So that's awesome. I mean, literally, I don't know, just a massive, massive uptick. So as we talk about that, I just want to toot my own horn because a lot of things that we've been talking about are not about identifying what's happening in the market today. We do talk about that, but really it's what's going to be happening in the market the next few days or the next few weeks and what's the big trend. I mean, that's been the big theme for what I've done since we started doing these videos. So with that being said, I heard something today and it really struck a nerve with me today, or it struck a chord with me. Not struck a nerve, struck a chord with me. And one of the things we were talking about is that Biden signed that, I'm not going to call it a relief bill because it's really not. 9% of the bill is for coronavirus. It's not a stimulus bill because if you look at it, it's not a stimulus bill. It's a pork bill. It's just basically payouts to his buddies. So it's the equivalent of the accountant raiding the corporate stash and handing it out to his friends. So, I mean, that's realistically what happened. So with the $1,400 direct checks that are going out, they said they're going to be going out this weekend. People will get it in their bank account as early as this weekend. I don't know if that means they're sending it this weekend and it'll be here Monday or Tuesday, or they're sending it today and tomorrow and it'll be here Saturday or Sunday or Monday or whatever. But they said most of the people, some of the people are paying off debt, but they said they have a feeling a lot of people are sticking it in the stock market, which I just think is really funny. So with that being said, I saw this article and it basically it says that, the relief spending is fueling the stock market bubble, which is definitely true. I mean, if you have everybody throwing your money at one particular target, then that is the definition of a bubble. We saw the dot-com bubble. We saw the real estate bubble. We saw a lot of different bubbles. And so the one thing I will say is this, is this trading strategy that we're talking about today, trading or investment. I kind of a little bit of both. It's not a long-term trend. I'm not looking to throw all this money in here and then be here 20 years later with this money set for retirement, because at some point in time, this bubble will burst. As many people come into the market as fast as they have, they've left as well. I remember I worked at this one company and we grew so quickly. We went from a tiny startup. I think I was employee number 40. And we had like 5,500, current employees, at one point. So we must have had 8,000, 9,000 employees. I don't know how many employees we had overall, but I was number 40. And I had an interview for a senior level job. And I asked, the guy asked kind of what my vision is of the company or whatever. I said, look, we've grown really, really quickly, but we can drop and shrink really, really quickly at the same time. And both of them happened. So when you're investing in the stock market, just understand this is a bubble. So in a sense, you're surfing a giant wave, and so you have to know when to get off. So for me, I have targets that we look at, and for me, just looking at my portfolio, I've already identified a target. We're sitting here. So when we get to around 300,000, doesn't have to be 318, but we get to about 300,000, that's when we pull the ripcord and we exit out because this bubble will hit. And just like the GameStop and AMC and all the other and the cost stocks, you don't want to be a bag holder, to use the Reddit term. So just understand that as we're doing that. So realistically, I think that bubble, because some of you guys are going to ask, when do I think that bubble is going to burst? I think it's going to burst. I don't know. Depends on kind of how fast things come back, but probably at the latter half of this year. I definitely don't see this stock market boom happening beyond that. So I think you're going to see people make their money. Everything's going to open up. You're going to kind of like what they're betting on happening will have occurred. And so there's nothing further that's going to launch the market anymore. So you're going to see massive profit taking. And especially if they're paying attention, and they have their stocks for over a year, it's considered a long-term capital gain, which reduces their taxes. So that is coming. So one thing, I read an article today, just to give a little humor on here. It's one of the stupidest articles I've ever read. And it might as well have been written in the mid-90s or the 80s or something like that, because nobody does what this article is saying. So the title of this article is How to Turn Your $1,400 Stimulus Check into $25,000 with Zero Effort. And so the idea is, boom, boom, boom. They said, if your bills are covered and you can afford to invest your check. Okay, first of all, how many people do you know that are like that? Like, I can afford to do that. I'm very fortunate because I have passive income coming in that happened way before COVID hit. But I mean, I am like a unicorn on that. It's not that I did anything amazing. I'm just very, very fortunate and blessed. But so you're reading this and you're like, well, if your bills are covered, are you kidding me? There's people that are a year, basically, they haven't been paying rent for a year, right? And their landlords are getting stiffed. So this is kind of insulting for them. There's one type of investment that can turn $1,400 into $25,000 with no effort on your part. Well, I would say there's a lot of them. I would say Bitcoin could do that, if you bought it back in the day. But anyway, that not being said, so as soon as they start the phrase S&P 500 index funds, that's when I'm like already beginning to roll my eyes, going, oh dear God, I know where they're going with this. They said these funds tend to follow the market, which, by the way, the market's been like this, so I'm not really sure that like that's a compliment. Earning an average returns of around 10% per year, and you're sitting here going, some people might go, oh, well, that's pretty good, but the smart people are sitting here going, wait a minute, they're earning 10% every year? No, they're not. This is a statistic that means, like, if you had invested money in 1960, overall over the last like 50 years, I guess that would be 60 years, they would have an average return of 10 per year. But what it doesn't account for is the fact that the market collapses and then it comes back, and collapses and then it comes back. But people can't, nobody keeps their money in it for that amount of time. So this is a statistic just for the sake of having a positive number. So it's a joke. Nobody believes it, and it's not a real number. I mean, technically, maybe it's a real number over the long term, but it's not a number that anybody has ever experienced. So he says, if you were to invest $1,400 into an index fund, you could potentially earn a lot of money. So you're earning 10% annual rate of return. It's like, what is it, like a CD that's paying you $10 million, 10% per year? No. Even if you didn't make any additional contributions, this $1,400 initial investment could grow to around $24,429 after 30 years. By the way, do you really think there's anything right now that you put your money into that would make 10% every year for the next 30 years, even on average? I don't think so. I don't think so. I don't really think there's anything out there. Of course, 30 years is a long time to wait, but going to nearly 25,000 is close to a 1,700% increase, which is not bad considering this investing approach requires zero effort. Yeah, it doesn't require any effort, but it does require you to sit on money for 30 years and hope that you're still going to get a historical return. The problem is, for the 70s, 60s, 70s, and 80s, and even 90s, you had decent returns. I mean, like 10, like as far as if you put money in a savings account or a bond or a treasury note or a CD, you could get like legitimate returns. But right now, everything's at 0% interest rate. Like people are wigging out because the treasury note went from, wait for it, under 1% to 1.5% for 10 years. Whoa. And yet this person's writing an article telling you that, you know, if you put it in an S&P fund, then you can get 10%. Well, yeah, go tell that to somebody who lost all their money in the S&P fund back in the Great Recession. Go tell that to somebody who lost all their money right before they retired last year. Go tell somebody right before the dot-com boom, right around 9/11, where the housing crash happened, what happened to their S&P fund, because it wasn't 10%. It's absolute total joke. And then on top of that, just to show you just how ludicrous their thinking is, by saving a little each month, you can grow your savings exponentially. Say, for example, by the way, if you ever hear somebody say, for example, something stupid is about to happen, about to be said. I mean, nobody says, say, for example. Okay, so you invest your $1,400 check now, but you also invest an extra $100 per month. Which, by the way, you know anybody that does that? Because I don't. Assuming you're still earning a 10% annual rate of return, okay, that's like saying, assuming Purdue runs the table and beats Alabama in the national championship game, right? I mean, give me a break. Assuming the short, fat dude with zits all over his face gets the supermodel, like, come on, like that's a joke. You'll have close to $222,000 saved after 30 years. Yeah, have thought about anything that's bad happened in 30 years, like multiple recessions, several market crashes, and we're not even talking about inflation. So after 30 years ago, it was 1990. Do you know, I was actually watching this like a TV show that was on YouTube that was like from 1992. Do you know how much a pickup truck, an F-250 pickup truck, went for in 1992? It went for $7,000. $7,000. So what do you think that $25,000 is going to be worth in real money? Especially when you look at the fact that the Treasury is just spending money like it's trying to be the Weimar Republic in Germany in the 1930s, or Venezuela right now, or in Zimbabwe, or when it just spent so much money that it was like a million lira per dollar, and they just said, oh, you know what we're going to do? We're just going to cut 3 zeros off of it, and we're just going to make it 1,000 lira per dollar. Like those all really did happen. So when you read stuff like this, just understand this person's a moron. Um, and nobody with any sense that you should ever follow their advice would ever put anything else out. So, all right. With that being said, I thought you guys would enjoy that. So some movement that we did today. I know this is what a lot of you guys are interested in. Oh, we'll get to wrong one there. All right. So Palantir sold yesterday at 26.10. Had it very briefly at 26.10. They had some good news today, so they're a little bit. They went down to 24, 23. But they're back at 26 today. But we sold that, and I thought that was a shot in the dark as far as a meme stock, but never really went anywhere. Nikola, basically, we put a sale in that. This was a fringe Biden stock. I mean, I liked it, but they had some baggage on the side. So with that being said, I sold it 16.60 today. It's up to 16.99, which is fine with me. And then let's see. Then over in the last couple days, basically I added Century Casinos at 8.50. It's sitting at 9.19 right now, so it's got a little bit to go down. IVR we bought mainly because it has an upside of 5%, and if things are getting back to normal and landlords are getting paid back and the mortgages are not really being distressed, then this is a good opportunity to take advantage of the stock. And so when we look at the upside, IVR is number 4 on the list, and we own 1, 2, and 3. So it's just adding that to our portfolio. Cinemark I bought today at 23.75. It's sitting at 23.83 right now. It's fine. Just bounced above zero. But again, we want to add to our travel and entertainment stocks. So specifically, we'll get down to this, but we want to load down this sector of our portfolio. And then Verint, I just happened to notice that I only had $1,500 in Verint, and it's cybersecurity stock, and it is a little bit below water, which is fine, but it has a 100% buy rating. So I was thinking cybersecurity stock, 100% buy rating, and yet I only have $1,500 invested in it. So I said, all right, it's a little over 49. If we take a little bit of and I don't have to buy it, but if it takes a dip down to 49, we'll buy basically 4 grand worth of it and add to our portfolio. Beyond that, let's take a look here. I was looking potentially at RDI. Again, they're movie theater stocks, which I think are going to pop, especially this summer. I only own $3,000 of it, and my cost basis is 461. RDI is sitting here at. Let's see here. That is where's RDI? 461. Okay, that $71 is not correct. So let's get this updated. There we go. Yeah. So anyway, my cost base is 461. It's sitting here at 758. If it takes a big dip, I will be more than happy to buy RDI. It'll increase the cost basis, but this segment is definitely going to go up. Um, let's take a look here. So we're sitting here overall at 199,000, almost at $200,000 in holdings, which is really good. Stocks went up about $6,000 today, and we breached the 400% gain, which means we've quintupled our money. So you invest $100 and you come out with $500. So not too bad. As far as a breakdown of our stocks, travel is at 66% increase, entertainment's at 59, and these are poised to definitely go up. So we see a big upside for these two. Oil is consistently going up because Biden's just trying to murder the industry. But the crazy thing is, the more you murder it, the more the price goes up, and the more profitable these oil companies can be because they can sell their product at a much artificially higher price. So you're going to see this jump up as well. I mean, look at Crestwood Equity, for example. That's quintupled as well. PVAC is just about done the same thing. So hopefully PBF and UCO has a big ability to jump up when you have big increases in the price of oil over the period of a couple months due to the arbitrage. But we're not going to get into that today. Casinos, man, I can't get enough of these. I might just take another day. I might look at this a little bit later and just say I'm just going to start buying casinos as a whole because I think people probably take their stimulus checks there. Who knows? But as states are opening up, you're going to see, I think, a big influx of that. So I'm going to have to take a look at that actually now that I think about it. Off the cuff, I didn't even think about that till just that moment. So I think you're going to see in future episodes, you're going to see me buying more casinos. But they have to make sense for us to do that. Biden stocks, Blink and Fuel Cell, we'll keep those in there. I love both of those. Blink makes EV charging stations, and that is a big growth area as a whole. So I'm not touching that. And this one's up at 71%. This one could easily be at 300% before too long. And Fuel Cell, kind of the same thing. They make the batteries. So we're going to leave that one alone. I was considering selling this one potentially, but I thought, nah, let's let the Biden stocks ride a little bit. So other stocks, Corsair, and again, we're at 25% for that. Corsair, they make gaming components. This one's been moving up, so we're going to leave this one a little bit. Fubo, again, I have 11 grand in this stock, and it's been moving up pretty nicely over the last couple days. So we're going to be in the red. Probably in a few positive trading days, we'll be back in the black. And with this amount of money invested, if we get back up to, let's say, if we get up to, let's say, $50 on this, because it's been well over 50, then we're going to start making some legit money. So anything over that, but it has a 100% buy rating, so that one's pretty awesome. Next ID, cybersecurity, again, we're not touching that one. Signet Jewelers, 800%. I mean, guys, this is crazy. You invest $100, you have $900 in your pocket. So this is just I can't believe the growth that this one had, of all things. And then crypto, Bitcoin's been up, and then future fintech and Verint. And Verint's more of a cybersecurity stock, but they do some blockchain as well. So we have that listed here, but we're going to let these ones ride as well. But overall, 25% travel, 25% casino. Let's call it 50% there. 16, 17% in oil. So we're basically at 2/3 of our portfolio there, and 5% in entertainment. So maybe I need to bump this entertainment one up a little bit as well. So we're going to look at casinos and entertainment to add. and then the rest we've kind of pared down our portfolio pretty well, so we're heavily weighted in what we're doing. So with that being said, the market's going up. There's going to be a ton of money being thrown into the stock market. So guys, ride this wave. But the one thing I will say is this, is you need to understand that this is a market bubble. I'm not telling you it's not, because we know it is, okay? It is a market bubble flat out. You just have to know when to get out. I have my exit at 300. Again, it's paying for law school and it's buying the beach house. So know what your goal is, know what your exit is.
Let's bring all of this to Steve Moore.
And be prepared to exit out of the market. So if you have any questions, let me know. Again, the spreadsheet, if you're new to this, there's a link where you can download this spreadsheet, take a look at it, parse it, look in a lot more detail. And to be honest, you can cheat and steal and take it and say it's yours. Make it better all you want. I'm always upgrading this and adding new things to it, but it's a great opportunity to track what you're doing, so you get a sense on kind of where things are at. Oh, also movement. I mean, obviously, the stock market went up today. We had some of the biggest gainers today in our portfolio. Velocity Financial, we sold that not long ago. That's fine. It wasn't really our type of stock, but it did really well today. Other than that, pretty much other than GameStop, we own pretty much everything here that's gone up big. RDI, again, I bought, or I added to my list. Did I add to the list? No, I will add it to the list soon, but it's basically gone. The only thing that's gone down somewhat at 11%. The rest of it's just too small to buy. And then we looked at 2 days. Again, we own pretty much everything that's gone up the most. And then RDI is really the only thing significant on the downside. So we don't buy when things go up for the most part, except for today when we did Cinemark, because we wanted to get that movie stock in there. But you know, if we have a bad day, then it's a good day because we're going to go shopping. So that being said, let me know what you think. Put a comment in the video, and I'll talk to you soon.
To get more information on the sales cheat code, go ahead and click on the subscribe button below. Also, down below in the video description, down there, there's a link that takes you to our website that gives you additional content, some additional freebies that we have, and gives you information on some programs that we have that have been proven to help people to make sales easy so that you can make the kind of money you want, live the lifestyle that you've always wanted, and not have to struggle in the process. And what might be the coolest thing of all is you don't have to put much effort into it. It truly is a cheat code that most people don't know about. And it's a cheat code that can change your life today. So click on the link below and let me help you start to experience these results starting right now.